Hi there. If you've been watching Seasonax, you might have seen our euro dollar trading idea, which we had at the end of May. Let me just flick over and show you what I'm talking about. On May the 20th, we saw there were some very strong seasonals for the euro dollar. Now, how did we identify this trading idea? Well, we identified it by going along to Seasonax's Seasonality tab, and we saw that over the last 10 years, the euro dollar had a nice seasonal period of upside from the 23rd of May to 7th of June, average return of 0.74%. It's just a strong time for the euro, and there was some dollar weakness. So that's how we saw these strong seasonals, and it looked very attractive. Now, what did we know at the time? Well, at the time, we knew that it had been a turbulent year so far for Donald Trump and his second term. And looking at the interest rate expectations between the Federal Reserve and the ECB, we saw an opportunity. And the key to understanding this opportunity is to know that when you're trading monetary policy divergence, the relative values matter more than the absolute strength. So what I mean by that is that the ECB had interest rates lower than the Federal Reserve's interest rates. But what was starting to happen is the ECB were bottoming out on their interest rate cuts just as expectations were starting to rise that the Federal Reserve would start cutting interest rates. So that meant that the perspective for dollar weakness was starting to build around this time. And it became clear that, hang on, if we take a look at inflation in the US, I was looking at the US this Trueflation index, which is meant to be a better representation of real-time inflation rather than lagging inflation, which you get reported. And if you look here, May 20th, you can see, look, inflation was clearly moving lower. So with inflation being relatively benign, then if you take a look, even now you can see the interest rates. You can see like the Federal Reserve's got higher interest rates than the ECB in an absolute sort of perspective. You think, oh, the dollar should be stronger. But remember, FX trading is relative, not absolute. So there's starting to be a change. And you can even see here, look, the expectations for Federal Reserve interest cuts is steeper than the ECB, you see, even now. And that was the sort of the key thesis for the opportunity. And we could see, remember, relative values matter more than absolute strength. There is a very good case that we might start to see some dollar weakness develop here, and that will support the euro dollar higher. And so remember, when you've got one central bank hawkish, in other words, dovish or neutral, that can create powerful FX opportunities, right? Long the hawkish currency, short the dovish one. Now, in this instance, it was relative. So it wasn't that the ECB was more hawkish than the Federal Reserve. It was just that the ECB has almost done with cutting interest rates just as the Federal Reserve's about to start cutting interest rates. So that just creates this tailwind for the euro dollar. That was the philosophy, right? Now, the beauty of this trade is that we had these seasonals backing up the philosophy. And if you look at this, from 24th of May to sort of middle of August, you can see there's still a positive bias. So looking at this, it's like, yeah, there's a nice bias here, but there was this particular window just over this time. It's oh, look at that. That's really attractive. And I could suddenly see the relatives are looking good. And subsequently, we've started to see the dollar weakness continue. We've had that big NFP miss for the July print, and then the June reading was revised lower. There doesn't go a day doesn't really go past without US President Trump calling Powell, too late Powell, cut. He's desperate to have interest rates cut, and the pressure is daily, right? And we had ISM services, their employment index recently dropping lower. So all of this, is just continue to support the euro dollar subsequently. And you can see at the time of making that video, we were looking at this key area here. And we said, look, if we get this staying above that 1,150 on a weekly closing basis, that is a powerful area. Stops could just be the other side of that potential trend line. and you see you got 2 or 3 weeks of just the euro dollar running higher. So look, Seasonax itself, it doesn't make a distinction between the technicals, the fundamentals, and the behavioral defects. That's not what it's there for. What this does is it shows you those strong seasonal patterns. This is why I love Seasonax for years, and I've been a user of Seasonax well before I became an analyst for Seasonax, because I just love this. I love having that extra layer of conviction that not only have I got the technicals with me, not only have I got the fundamentals with me, but I've also got this seasonal pattern, which often is based on strong reasons. Now, you don't always know what the reasons are, but sometimes you do. But I'd much rather have an extra layer of confidence. So if you would like to sign up to Seasonax, come along here and you can find thousands of seasonal patterns that are just waiting to be revealed. They've got an incredible screener that is just so helpful. You can look at stocks, indices, commodities, currencies, just screen all these different periods, and you can find seasonal patterns that are just waiting to be revealed. And one thing you can even do is think, well, hang on, do I have a bias for a particular commodity or currency? Well, let me look at the seasonals. Can I add an extra layer? So just sign up here, pop your email in, and you'll get access to certain instruments for free, just as a trial basis, and you'll be able to see for yourself how powerful Seasonax really is. I hope you've enjoyed this post, and I hope that you can see how one way of putting these seasonals together.